I'm very pleased to be introducing Roger Bootle. I was going to use that old hackneyed phrase, he's a speaker who needs no introduction. I think in this case, while I will introduce him, I'm sure you will all recognise him through his frequent appearances on television, and when he starts speaking, I'm sure you will recognise his voice from frequent contributions on the radio. Roger established and now runs the Capital Economics Consultancy in London. Previous to that, he was chief economist at the HSBC. He can also lay claim to the title of a wise man. I think most people here are too young to remember this, but in the mid-1990s, there was a group advising the then Chancellor of the Exchequer who were given the label of, I think it was 7 wise men. Men being one of the operative words, they were all men at the time. And this was effectively, I would say it to some extent, the forerunner of the Monetary Policy Committee. It was advising on interest rates and so forth. But it's a great title to be able to have, I think, to think of yourself as a wise man. And I'm sure he will be imparting wisdom later. One particularly, I think, relevant for this evening is that Roger was the winner, I think 2 years ago, of the Wolfson Prize with his team from Capital Economic. And this was a prize which I think is, in monetary terms, just behind the Nobel Prize. And this was for a project, in a sense, or writing a report on, let me call it, deconstructing the euro. It was ways of the euro being, as it were, dissolved. Now, rumours that this report is winging its way to Brussels and Athens at the moment may be a bit overstretched, but I'm sure they should be reading this to see how to deconstruct the euro, because at least my view is that within a few years that will be happening. He's also the author of a range of books, a regular columnist at the Daily Telegraph. His most recent book is The Trouble with Europe, the title of his speech tonight, and copies will be available outside for signing and purchase after this event. I was slightly surprised at the title. I was wondering why it was in the singular rather than the plural. I would have thought maybe it should be Troubles with Europe. But then we'll see on that. The events of the last few days with the election in Greece has perhaps brought the issue of the euro again back to the fore. I was going to say that this week issues about the euro have again come centre stage and whether it's going to be succeed. But then thought, well, actually this happens most weeks. That there's some event happening, although they haven't been quite as frequent as they had been in the past. But I think it's will be particularly helpful at a time when it looks as though, from all sorts of points of view, the euro is going to be now under the most severe challenge that it has faced, and whether in my view, its continuation is in serious doubt. But we welcome now Roger to speak more generally on the trouble with Europe.
Well, thank you very much, and thank you for referring to me as, I think, a former wise man. I mean, the English language is very strange. You could paraphrase that and say, I'm an unwise man. It's a great pleasure to be asked to speak to you here today, not least because my own connections with Leeds University go back a long way. I was just thinking, actually, as chatting earlier on to some of the faculty about how long ago that is, but I think it's very nearly 40 years ago that I collaborated with the then Professor of Economics here, Walter Newlin, who is one of the joint constructors of this marvellous machine just outside there. Those of you who haven't seen it, you should have a look. And I used to come to Leeds to collaborate with Walter on the revision of the textbook Theory of Money, which set me off on my publication journey. Not yet over, I hope. Anyway, very great pleasure to be here. Fascinating topic, and obviously it's multifaceted. What I'm going to do today is talk about 4 main subjects. Briefly, something about the origins of the EU. Then I'm going to talk about its geographical expansion, because I think this is actually quite important and it relates to the whole question of identity and competence. Then I want to talk about economic failure and the euro. And then lastly, about reform and possible exit. But please, if there are other aspects of the question you want to ask me about, I would be very happy to try to answer those when it comes to questions and discussion. I said I'd start by talking a bit about the origins. Well, you can't get, as it were, much more original, in the technical use of the word, than by looking at the Treaty of Rome. Pretty fundamental, actually, what the Treaty of Rome said. 1957. It said that the founder members were determined to lay the foundations of an ever closer union among the peoples of Europe. Very interesting, those words. Ever closer union. So it wasn't so much when you joined it that you were accepting a certain set of conditions in the here and now, or even subscribing to a particular objective that was going to be reached, let's say next year or the year after. What you were signing up to was the pursuit of ever closer union among the peoples of Europe. Well, it's interesting, this, because there's no doubt that this was the ambition of the founding fathers of the European Union and still is for many people running the European Union. But it wasn't what we understood in this country. We're a really boring, practical lot, really. I mean, Napoleon said it all, didn't he, when he described us as a nation of shopkeepers, interested in matters practical. And for people in Britain, when the issue came up as to whether Britain should join this, it was really described by most people as being an issue about the price of fish and a few other things. We had a referendum. We joined in '73. It was quite divisive, this policy of joining the EU, and to try and settle this issue once and for all, the Labour government of the day established a referendum in 1975, and that was quite fascinating when you look back on it now, because, as I say, most British people didn't think this was about anything other than practical economic questions to do with markets and market access. And there were two British politicians in particular who saw it differently, and you couldn't have imagined two more opposite types of politicians than Enoch Powell from the right and Tony Benn from the left. And they said, look, this isn't about the price of fish. This is about sovereignty and government and independence. This entity is going to be moving towards something like a common state, and in the process we're going to be dissolving the state that we have. That's what they said. And of course they were largely disbelieved. I happen to think they were right. That is exactly the journey that what we now call the European Union was on, and is still on. Now, Lady Thatcher, or she was then Mrs. Thatcher, made, I think, a wonderful speech. Can't remember the exact date, it was 88, in the late 80s, now known as the Bruges speech, very imaginatively, because it was delivered in Bruges, where she drew a contrast between so-called deepening of the union and widening of the union. That's to say, recognising this urge among many people to push towards ever closer union without final destination, and also a desire on the part of some people to broaden the membership of the union. She thought there was a conflict between these. It would be possible to deepen the union and to go for some form of very close association, perhaps statehood, among the small number of countries that weren't that disparate at the time. But equally, it would be possible to stay with the EU roughly as it was at that time and cast the membership net a lot wider, but to do both would lead to serious problems. I think this was, I have to say, an absolutely brilliant insight. It put into a nutshell the problem of the EU. And of course, what did the EU do? It did both. And much of the subsequent difficulties, I think, can be traced back to that. Well, it wasn't a decision, because like so much else in the EU's history, it just sort of happened. To that happening, I think so much that's gone wrong can now be traced. The geographical expansion of the EU has been absolutely staggering. I'll go back to some of the other points in a moment. I guess you know roughly the history, but it's worth recounting it. This chart brings it out. The original 6 members of the EU were France, Germany, Italy, Belgium, Netherlands and Luxembourg, shown there in red, if you like, corresponding to a sort of slightly enlarged version of the Holy Roman Empire, and perhaps driven by some of the same ideas, I don't know. And then in 1973 comes the first expansion, shown there in blue, the United Kingdom, Ireland and Denmark. Then we get 1981, Greece. You all know where that is. 1986, Spain and Portugal, the sort of light brown colour there. And this is still, apart from Greece, at this point, bringing in countries that were roughly, I suppose, compatible. I'm going to show you some charts on this in a moment. And then in 1995, some countries that are definitely quite similar, actually, to many of those in the European core. That's to say Sweden, Finland and Austria. 2004 is the time of the EU starts to change quite dramatically, because then are admitted some countries that used to be part of the communist bloc. That's to say Poland, Czech Republic, Slovakia, Hungary, Estonia, Latvia and Lithuania. Those are the countries in the sort of light purple shading over there. And then in 2007 we had Bulgaria and Romania. Countries shown there in that pale green there towards the right, countries that are pretty undeveloped at the time and of course still are. And then in 2013 we had Croatia. So from the original 6, the EU has expanded to a membership now of 28. This expansion is important for a whole series of reasons, but I just want to draw attention for a moment to the question of the free movement of labour, which is enshrined in the Treaty of Rome as one of the key freedoms, freedom of movement of capital, of goods and of labour. And obviously there's a major dispute about it now. Free movement of labour, it sounds as though what that means is really that people from one country can go and, country A can go and work in country B, and people in country B can go and work in country A, and this nice swapping about is all terribly nice and convenient and helpful and efficient, which it is. And that was very much the vision of those who constructed the original EU. But unfortunately, that's not quite how it's turned out. And it's not quite how it's turned out, not least because of the very disparate nature of the countries that are now admitted to the EU. How many British people have emigrated temporarily or semi-permanently to Poland or Lithuania or Latvia? How many do we know? Not a lot. And the reason, of course, is that's not where the prosperity or the jobs lie. So in widening the EU in this way, what has been set up is the possibility for mass migrations of population. You might be in favour of that, you might be against it. It's certainly not what people thought was in store when they joined the EU, and obviously it's something that is not very popular in many parts of the EU. This expansion also, I think, brings into question an issue that was there right at the beginning of the EU's formation. That's to say, what is the EU really about? What is it? What defines it? Why is it there? What's it there for? What are its limits? If you like, what are the appropriate borders of the EU? I've just shown you how those borders have been expanding. And there are still umpteen countries, we'll see more about this in a moment, that are in the queue to join, and still others that might plausibly join. Well, is this process got an end? What is the EU supposed to be? And in many ways, that question wasn't properly asked, and it wasn't appropriate to ask it when the EU was first formed, because this, of course, is the era of the Cold War and the Iron Curtain. So all those countries that have recently joined to the East, and a whole load of others which could conceivably join, they couldn't possibly have joined then, and indeed the very question of them joining simply was unasked, never mind unanswered. It wasn't on the agenda. Since the end of the Cold War and the collapse of communism, some of these countries have joined, I say some others are in the queue. There's this wider question: where do you draw the boundary to Europe? Is this simply an association of all those countries that somehow or other are contiguous with other countries that are in this thing called Europe? Is it that they subscribe to a culture and a set of rules and regulations that has much in common with us? If that's the case, why aren't Australia, New Zealand and Canada in the EU? If it's the former, should we extend the boundaries of the EU to Ukraine and possibly Russia? And obviously the contemplation of the extension of the borders to Ukraine very much was in the mind of European politicians until, well, at some point last year. Clearly there was an intention, already beginning an action, of cozying up to Ukraine with a view, first of all, through a trade agreement and ultimately to bringing Ukraine into the EU. A fundamental question of identity. Who is it? Who are the Europeans? Why do we want an entity called the European Union to correspond to this vague geographical extent? And what are the limits of it? And how into all this do you fit the notion of efficient government? Maybe there is some sense in which a much broader canvas of countries are genuinely European and have things in common. But is it possible to imagine that large group of countries, disparate countries, being efficiently and well governed? Those are fundamental questions which I think have never been properly asked about the European Union, and they're coming into focus now. And this relates also to my last blob on this slide, that's to say the Turkish question, which I think is supremely important. And I've got a view on the Turkish question which I think is probably fairly unusual. I know Turkey reasonably well, and I think it's an extremely important country geopolitically. It's very important, I think, that it be anchored in the West. And as you know, it's been a candidate member, I say an aspiring member of the EU for some considerable time, and it's been kept waiting at the door, to the point now where the Turkish people are pretty fed up with this, and actually the objective of joining the EU has become now pretty unpopular in Turkey. If we're not careful, we're going to find that they're going to give up altogether, with heaven knows what geopolitical consequences. Why have they been kept waiting at the door? Well, they've been kept waiting at the door because the idea of admitting something like 90 million people who are by nature Muslim, well, by tradition Muslim, and actually with a very, very sketchy history of adherence to the rule of law and democracy, and what's more, given the way the EU is currently constituted, with the right of free movement of labour across the whole of the EU, the idea of that is anathema to the voters of Western Europe. They simply won't stomach it. That is the sort of mess that the European leaders have brought us into, with, I think, very dangerous consequences, geopolitical consequences. Well, what's the answer to this? The answer is quite simply this. I think the sort of European association that we should have, and we should have a European association, should be one that allows us comfortably to admit Turkey as a full member. That's how we think about what Europe or the European polity should be. The peoples of Europe should be happy about having Turkey in. And if they're not happy about it, that tells you something is wrong. And the current structure of the EU, with the free movement of people and the move towards ultimately fiscal and political union, simply will not wash with Turkey in. And accordingly, Turkey has to be kept out. That, I think, is profoundly dangerous. Now, I said I'd show you some things about the disparity between different countries joining and aspiring to join. This chart shows 5 of the 6 original members. It shows their GDP per capita in 1957. I haven't showed Luxembourg, partly because it's small and partly because it's an outlier. It usually complicates things. And you can see from the chart that the per capita GDP level, roughly equivalent to, or close to anyway, standards of living in these countries, was not very different one from another. Netherlands was the richest, Italy was the poorest, but the gap wasn't that big. When the EU expanded in 2004, this was bringing in countries that were very different in levels of GDP per capita. And GDP per capita is just, as it were, the formal economic way of measuring something. Underlying all this is a very different level of economic development. And you can see there that on the right, Poland had a GDP per capita, what is it? I guess it's around about a third of the GDP per capita of the richest countries shown there on the left. This is a very different setup from the one involved in bringing together countries in 1957 that were roughly at the same level of development and standard of living. And then what about now? Well, I haven't got the very up-to-date figures, but these relating to 2012 are good enough. They show the average of the EU, which is the second bar on the left, GDP per capita again. And I've shown you also some recent joiners and also some countries that are aspiring to join. The real exception here on the left is Iceland, which for a variety of reasons has got a very high GDP per capita. But then apart from that, most of the other possible joiners have got very low levels of GDP per capita. Romania and Bulgaria caused quite a significant issue for the EU when they joined a couple of years ago. They're shown with the red bars there. What are they, fourth and fifth from the left? And you can see they were a fraction of the EU average. But now look at the countries on the right, how low these income levels are. We're talking about Moldova. Of course, that will take a regime change in Russia to allow Moldova to join. But in Moldova's case, you're talking about a GDP per capita, I guess, around about a tenth the level of the EU average. This surely is a concept of expansion which poses all sorts of problems that weren't envisaged when the EU was first put together. Bring these countries in different levels of income, you have massive problems of fiscal transfers, huge problems of transfers of people, big difficulties as opposed to the unification or bringing together of countries of roughly the same level of development. I now want to move on to say something about my second topic, that's to say economic failure and the euro. I'm not repeating myself when I say economic failure and the euro, because there's more to economic failure than just the euro, but I will say a fair bit about the euro. First of all, to bring home the scale of relative economic failure in the West in general. This chart shows you what's happened to GDP cumulatively since the beginning of 2008, that's to say the financial crisis, in a range of countries. The country on the left is China. I really do love this chart because it makes people sit up and think about the nature of the world. During this period that's all been gloom and doom, the Chinese economy has grown by 70%. That's to say, China has added Germany and Italy. The emerging markets as a whole, about 40%. Brazil, India, not much less than that. The US has done, of course, nothing like as well as that. It's an old clapped-out economy like the UK, but it's managed some sort of growth around about 10%. Now look at the Eurozone on the right. I'll look in more detail in a moment about performance within the Eurozone, but the Eurozone has done particularly badly over the last several years, even compared to other so-called developed countries like the United States and the UK. Within the Eurozone, there's been a massive divergence, which is, of course, a large part of the problem. Again, this is change in GDP since the beginning of 2008. On the left, there are a few countries whose GDP has managed to rise. I don't quite know why Malta's done so relatively well, but of course it's small, and as you can see from the chart, it is indeed only small countries that are on the far left there, showing decent rates of economic growth. On the right, there's poor old Greece, which has suffered a decline in GDP of about 26%, which in the West is unknown since the 1930s. That sort of fall of GDP mirrors the scale that happened in Germany and the United States in the 1930s, but nothing else like it since anywhere in the West. It's happened in Asia, but not in the West. But other countries as well done badly. Italy, big declining in output. Spain as well. And you can see even the supposed success stories, that's to say Germany, have not done very well. And I'll say something in a moment about why that might be. But let me, not least because Greece is in the forefront of people's minds, say something first about the fiscal position in the Eurozone. Because a lot of these countries have made, actually, I'll use a word of Greek origin, Herculean efforts to improve their public finances. And actually, they've succeeded on some definitions. This chart shows you what's happened to the government budget deficit as a share of GDP in a variety of these Eurozone countries. And the first bars, the red bars, refer to 2009, and the blue bars refer to 2014. It says forecast, so I think economics is probably the only subject in which you can forecast the last year, but anyway, we still are forecasting the last year. You compare the red and blue bars for these different countries, you can see what's happened. And Greece is on the far left. Greece has moved from a position where the deficit was very nearly 16% of GDP to the situation where it's now virtually zero. And indeed, Greece is running a primary surplus. That's to say, excluding interest payments, it's in surplus. This is an absolutely extraordinary achievement, if you want to use that word. And of course, it's not unrelated to the Great Depression of Greek output that I showed you a moment ago. The other countries also, by and large, have made pretty big improvements in reducing their deficits. So, you might think, the fiscal problem has been cured. Unfortunately, despite this extraordinary effort and considerable degree of success in reducing the fiscal deficits, the all-important debt to GDP ratio has increased. Now, this shouldn't have been a great surprise to a lot of people. Indeed, it wasn't a surprise to people in my firm. I mean, if you clobber the economy with a lot of austerity, GDP tends to be pretty sluggish. If you've got any deficit at all, then of course the total stock of debt is rising. So if GDP is static and the total stock of debt is rising, then of course the ratio of debt to GDP is rising. And in these countries, particularly Greece, it's not as though GDP was static, it's fallen by 25%. And now we get another phase of this crisis with the beginning of deflation, because with deflation, and that's going to be a factor driving down the level of nominal GDP, and it's nominal GDP that's relevant here, even if real GDP is constant. So the debt problem has actually got worse. So these countries have been running faster and faster, not to stay in the same place, but in fact to go backwards. Now, when points like this are made, a number of commentators are often heard to say things like, if we're not careful, Europe's going to end up like Japan, with a lost decade. I'm interested in this expression, lost decade, because it's remarkable to have so many mistakes in such a short period. That's to say, two words, lost and decade. They're both wrong. It wasn't a decade, it was two, and they weren't lost. Japanese output, in this period of enormous Japanese failure, Japanese output continued to rise. Here I plot what happened to Japanese GDP from the onset of its difficult period in the beginning of 1991 and compared it with what's happened to Eurozone GDP from the onset of the latest period of depression, beginning with the onset of the financial crisis in Q1 2008. So you can compare how the two economies have behaved. So there we have it. Japan's lost decade, so-called. Japan carried on growing. Europe's own little local difficulty, GDP declined. So next time you hear someone say Europe might end up like Japan, the real reply you should give is, they should be so lucky. Now, why is it that Eurozone economic performance has been so terrible? Well, there's some more deep-seated reasons about the EU, which I'll refer to in a moment. But as far as the Eurozone itself is concerned, it's essentially the interaction between three things. The uncompetitiveness of the weaker peripheral countries. The fact that costs and prices were allowed to rise dramatically in those countries, which caused them to lose competitiveness, price competitiveness, against the core. That's factor number one, and that would depress GDP anyway, and the depression of GDP would worsen their public finances. And because of that, along comes factor number two, that's to say the need to pursue policies of austerity. That depresses GDP without, as you've seen, actually reducing the debt to GDP ratio. And the third factor, the real killer factor, is the Germanic one. That's to say, the midst of all this, combined with all this, the insistence on Germany, on running current account surpluses and a very tight fiscal position. You'd think, given this situation, the rest of the Eurozone, the logical thing, the fair thing, the appropriate thing, the constructive thing would be for Germany to expand domestic demand and thereby make it easier for the rest of the Eurozone to have a reasonable GDP performance with reasonably low levels of unemployment. But no, the German position is everybody else should be like us, and we are people who work hard, save hard, export hard. It's not up to us to change things. Oh, and by the way, if we did relax, that would give a very bad signal to all the rest. So actually what Germany should do in these circumstances, far from spending more, is spending less. That's what's happened. And the interaction between those forces is a machine for creating depression. Not unforecast, I might say. None of this is particularly surprising. That's the position that we are now in. To such an extent, by the way, that the Eurozone's surplus has now become the biggest in the world. Extraordinary. The Eurozone started out, current account surplus. The Eurozone started out roughly in current account balance, and we've had several major imbalances in the world over the last 10 years or so. The oil producers, of course, but that's now gone away. China with a huge level of excessive exports over imports, that's just about halved. Japanese surplus has collapsed. Meanwhile, in Europe, what's happened? Surplus has shot up. And the reason is not any change on the part of the Germans or the Dutch. The German surplus about 7% of GDP, the Dutch about 10% of GDP. That's not really much changed. What's changed is the fact that the former deficit countries in the south of Europe have moved from a large deficit themselves to balance or surplus because their domestic demand has been completely squashed in this whole process. So the Eurozone is now, I think, a major world problem. It is sucking demand out of the world economy to a greater extent than any other area in the world. Now, that's the Eurozone. I said I'd say something about the EU, and the problems that are besetting Europe aren't all about the euro. And if you look at relative economic performance of the Eurozone countries, or indeed the EU countries, going back over 30-odd years, you see that there was a deterioration in Europe's economic performance well before the euro came along. Initially, after the formation of what we now call the EU, there was a burst of strong growth in the EU member countries. And that's one of the main reasons, of course, why Britain wanted to join, because she thought she was losing out from all this. Some fantastic growth rates in those early years, but they came down, they fell, the growth rates. And progressively, relative economic performance, that's to say the EU countries compared to the rest of the world, not just the emerging markets, but actually other advanced countries, the United States, Canada, Australia, relative economic performance of the EU countries deteriorated. Something was going wrong before the euro came along. Now, what was it? Now, I don't think that everything that's wrong in Europe is down to the EU. And by the way, when I write that in my column in the Tory Graph, I get masses of abuse from disgusted of Tunbridge Wells, who say things like, call yourself a Eurosceptic, you're a traitor, for saying that not everything that's gone wrong in Europe is due to the EU. For instance, when my son's football team, Chelsea, loses to Bayern Munich, that's not the fault of the EU. Although there's a certain sort of stripy, blazered brand of Eurosceptic who thinks it probably is, and he certainly wants to find reasons why it might be. So what else might it be? Well, a combination of things. First of all, lots of national governments have done a lot of stupid things in Europe over this period, and they produced nasty results. Over and above that, I think there's a European malaise which is not the same thing as an EU malaise. In fact, perhaps what's wrong with the EU is itself the result of a European malaise. There are all sorts of things which have gone wrong in Europe, which are not particularly admirable in Europe, including, dare I say it, the state of higher education in much of the continent, which I don't think can be laid at the foot of the EU. However, Having said that, there are some respects in which I think the EU is responsible for poor relative economic performance. And I've got 4 principal ways in which I think that has worked. First of all, the very objective of harmonisation and integration itself leads to damaging economic results. Because if you start off with countries and traditions and legal systems that are disparate, very disparate, the urge to harmonise leads directly to the urge to over-regulate. And that has indeed been the European story. It's been a story of excessive regulation. I might add, by the way, that on the whole, the EU has been constructed not by economists, but by lawyers. And I think you can see the results of that, and they aren't good. That's to say, this has been mainly, the rules and the regulations are not, in general, business friendly. They tend to be constructed without due cognizance of the law of unintended consequences. So, excessive regulation, number 1. The second is not so obvious, but I think it's pretty important, and that is what the European Union has done is it's led to the distraction of attention of European elites. Over the last 50 or 60 years, European elites, political leaders, to some extent business leaders, have been directed towards harmonising this, that or the other, forming this, that or the other union. Meanwhile, the real sources of economic growth and prosperity have received hardly any attention. A country I know a bit and visit every so often is Singapore. There's much about Singapore I don't like. I don't think I want to live there. However, I'm absolutely bowled over by the achievements of that place, which not so long ago was an undeveloped, swampy island abandoned by the British. And the governing elites of Singapore, what have they concerned themselves with? Have they been interested in harmonising and integrating? Don't think so. What you find there is a government obsessed with the real things that matter: infrastructure, education, things that government can get right. And they have got them largely right. That's my second way in which the EU has caused problems. The third is it's spent money badly. Now, I don't think this is enormous. The popular British press thinks it's enormous, full of all these stories of money being wasted, and some of them are pretty grisly, these cases. But of course, the EU budget is still pretty small. But the evidence, I think, is fairly clear that the EU budget is not well spent. The majority of it is spent still on agricultural support. The accountants have failed to pass the Commission's budget, has failed to ratify it as being, of proper repute, properly done and accounted for something like about 15 years. Money is grossly wasted, and there's a massive level of corruption. The fourth factor, I suspect, is the most important, and it's not what you'd expect. The EU, because it's shoved people together in pursuit of a common aim, has suppressed competition between countries and governments. We're used to the idea that competition brings benefits and advantages in the world of firms and industries. We're not used to the idea with regard to government, but it applies. When was Europe's golden age? When did Europe achieve the greatest prominence in the world? Was it when it was a single bloc? You must be joking. The great maritime empires of the European civilization were in rivalry with each other. The great explorers didn't set out from a united Europe. They set out from Venice, Florence, later Portugal, Spain, Britain, Netherlands. These countries were competing against each other, and the governments were competing against each other. I think that major bane of the modern world is excessive government. Not everyone agrees, but I think it is. because government is potentially so powerful. How do you constrain this monster? Well, I think the answer is the same way you constrain monopoly power within an economy. You make sure that it has to compete. So the objective of forcing everyone together, harmonising, oneness, is potentially, I think, extremely dangerous, leads to excessive government, excessively expensive government. Now let me move on to my fourth and final topic, that's to say the possibility for reform and change and, of course, the possibilities surrounding exit. I'm pretty clear that things aren't going to remain as they are, actually. I mean, for a start, the state that the Euro's in, that's going to force major change. It's quite obvious, but it was obvious to many of us from the beginning, that monetary union, the Euro, is really a halfway house, or as I call it here, monetary union light. You can't have an effective monetary union without fiscal and political union. And plenty of people on the continent, of course, realise that, and quite a few want, therefore, to press on towards fiscal and political union. But that's something that we in this country certainly couldn't accept. I mean, if it was quite clear that what we're talking about is a fiscal and political union, well, the members of the EU, I mean, forget Nigel Farage, I mean, he hasn't got a need to campaign. I mean, this country's going to vote by a massive majority to stay out of all that. So there's a question mark there. Now, it might well be possible, of course, to have a two-tier membership of the EU under which a core went forward to close union, to fiscal and political union, and an outer circle or a second tier, if you want to use these rather value-laden terms, or a slower lane, remained outside the inner core. And that would, of course, include Britain and maybe some other countries. It's possible that that might happen, but it's dangerous. And certainly if Britain were to accept that as a settlement, she would need cast iron guarantees from the core that they weren't going to effectively make laws and regulations which would overrule the UK, that the UK would have continued free access to the market, and that it would just be outside, as it were, those political and fiscal things over which the core had some common union. It's possible, this, but I think it's very dangerous. It's not obvious, indeed, that other members of the EU would agree to it. In some senses, of course, it's not that different, analytically, from the opposite situation where we withdraw from the EU and then reach certain sorts of agreements with the EU. In this case, as I'm positing here, we stay in a thing called the EU. We're in a different category of membership. And an alternative case, we leave the EU and then we form other sorts of association. Those things might come, in the end, to the same thing. There are also considerable forces pushing for reform in Europe. We've seen the rise of Eurosceptic parties across Europe. Now, of course, a Eurosceptic party, AfD, in Germany. That's a major development because for a long time there wasn't any political party that could act as a receptacle and expression of Eurosceptic sentiment in Germany. In France, Marine Le Pen is ahead in the opinion polls, and her expressed intention is to take France out of the euro, to renegotiate France's membership of the EU, and to submit that to a referendum, and if it's not won, to pull France out of the EU. Meanwhile, the Franco-German relationship, which has been right at the centre of the EU from the beginning, has undergone a marked change, because in the first few years of the Euro's establishment, France and Germany performed pretty much in tandem with each other, according to almost any economic variable you care to name. GDP, fiscal policy, current account, inflation. You could hardly put a cigarette paper, a Gauloise even, between the two countries. And then what's happened over the last 5 or 6 years is they've diverged, again with regard to pretty much every indicator. German economy much stronger, French weaker, German unemployment rate now half the level in France, Germany still with its big current account surplus, France going into bigger and bigger deficit, France becoming more and more uncompetitive. This suggests that there's got to be some major change in the EU. And then I wouldn't underestimate the extent to which the reform drive coming from Britain is supported by other countries, most notably the Netherlands, but also quite a lot of support from Scandinavia. However, there's a big problem here, which is to do with the treaties. a lot of, I'll call them optimists, say, well, look, can't we get Europe reformed in a piecemeal way, and we'll give David Cameron a few odds and ends which he can then present to the British people and win a referendum on this subject if it comes to that. I think the trouble is that anything that you could do without a treaty change would not amount to anything substantial. And you're going to need something substantial to assuage the anxieties of the British people. So amending the treaties is critical, and that's virtually impossible, or very difficult, because you're going to get a massive wrangling between the different countries, and then in a number of these countries, they then need to get the amended treaty not just past Parliament, but past the people in a referendum. And there's no confidence across Europe that referendums on this subject could be reliably won. So this is really, I think, an impasse. Let me, as I close, say something about the UK's position if we came to withdraw from the EU. There will be some uncertainties and some costs, but in general, I think a lot of things would not change. You keep hearing people say things like, well, if Britain turned its back on Europe or it walked out of the single market, all these various expressions, completely and utterly misleading. If we left the EU, most trade that we currently do with the EU would continue. The overwhelming majority of it would continue. And both sides would have a strong self-interest in establishing a free trade agreement between the EU and the UK. It's widely understood that the EU is the UK's biggest single export market. It's not widely known that the reverse is also true. That's to say, the UK is the rest of the EU's biggest single export market. Bigger than the United States. So actually, the most important exchange rate relationship for the rest of the EU is not euro-dollar, it's euro-pound. So both these sides have a very strong incentive to make sure that things get sorted out. If we were outside the EU, we could then reach all sorts of agreements with a whole load of other countries around the world. We could reach a free trade agreement with NAFTA, or even join NAFTA, the North American Free Trade Association. And I think that's a real model for the sort of association we should have. 3 big countries get together, Canada, United States, Mexico. Free trade, free movement of a whole load of things. However, no common currency, no political union, no freedom of movement of labour. Seems to work all right. That's, I think, a model for the sort of association, free trade between them, that could be copied elsewhere in the world. My last blob, the Commonwealth. I don't think we can ever have a very close association with the Commonwealth in the sense that of the association with the EU. It's not a bloc in the same way that the EU is. But there's no doubt in my mind that we've grossly underestimated the importance of the countries in this grouping. And again, maybe there's something that Britain could do to maximise the benefits of its links with the Commonwealth, which is now a very rapidly growing economic area indeed. Not just because India is a part, but also, of course, because it contains many African countries, which are also now growing extremely fast. So I've got to come to a conclusion. I hope it shouldn't be in much doubt. I mean, I support the Prime Minister's stance on the EU in the sense that I think the right thing to do is to try to get it to be reformed. I've already indicated we need some sort of European association, I think. The whole of Europe needs it to act as a bulwark for peace, to administer policy on the environment, to give some institutional backing to the ties of friendship and culture that bind us. We need some sort of association. The trouble is, not this sort of association. So I support the attempt to change it, and if he succeeds, I for one, change it substantially, I for one will vote to stay in. But if he doesn't change it, I think the right thing is to leave. Key points to remember: the EU is an area of relative economic failure, and all the signs are that's set to continue. The euro, an appalling idea. Whose idea was it? It was the idea of the European elites. It is the latest, most damaging and most obvious of a whole long line of appalling decisions. in the EU which directly derive from the nature of the EU. The euro is to monetary policy what the cap is to agriculture. We've been here before, and if we stay in, we'll be here again. Because of poor productivity performance, poor policy management, very bad demographics, the weight of the EU is set to fall. The weight of the EU in the world is set to fall quite considerably. I think the essence of the problem really is that the ideas behind the EU, the institutions of the EU, are really passé, old hat. They derive from a particular period of history, that period in the mid-50s and 60s, the world still dominated by memories of the war, still split between East and West. This is not the world in which we now live. The most important thing for Britain's economic future, I think, is not so much our relations with the EU, in or out. The most important thing to get right is our relations with the rest of the world, the bigger bit of the world, the bit that's growing very fast, the bit that's going to be even bigger in the future. That's what we've got to get right. And the EU, in regard to that, I think, is increasingly an irrelevance. I'll leave you with that last thought. Thank you very much.